But I do think that looking at where the 10-year's been over the last year or so, we haven't seen us really get much beyond this 1.60 rate on the 10-year. So we'll see if we can continue on the march up. Earlier today we were a bit higher, came back a little bit. So I just think that there's a little bit of room to run there before we have to get into a little bit of a concern mode. Now, I think the bigger thing as far as the market goes is once again this week, we saw it again last week, the buy the dip mentality still exists. And when we have any kind of sell-off, we do see people come in to buy, particularly the Apples and the Microsofts of the world for a hope of a bounce back, if you will. So we'll have to see if that continues to go forward. Again, it's been something that's worked very effectively for the last 10 years. So we'll have to see if people continuing to go to that playbook, if you will, if we have any kind of significant sell-off. And as we both know, September and October tend to be really rocky months for the market. So we finish up September tomorrow, or here for you later today. And so, heading to October, what is that going to look like? And just as importantly, what's the last quarter of the year going to look like?
Yeah. JJ, good morning. Thank you for joining in this conversation. If you're talking about yields inching towards 2% by the end of this year, I don't know whether momentum would carry yields all the way up to that mark, 1.66 seen as a technical resistance level. What would that mean in terms of a pullback for the markets? I mean, how much can the markets go lower from here? Because even in the wake of rising yields, I see this market being resilient, one day up, one day down.
Yeah, that's exactly what it is right now. And to be honest with you, I think 2% is still a little bit of a stretch by the end of the year, because I don't know that the Fed's going to give us that much more color before the December time period in terms of what their next steps are. Now, they gave us some things to consider in that, okay, we are going to do some tapering, but there's no definite dates associated with that. And until we have a sort of more definite dates associated with that, that still remains a bit of a guessing game, and I think you're hitting exactly on it. So with that, what happens? Every time we have a bit of news, everybody's trying to say, okay, is this the piece of news that helps make the decision for the Fed, et cetera? And so it's not this Friday, but a week from Friday, we'll have the employment situation here in the U.S. That will obviously be a number that we're all going to be looking at pretty significantly to see if that gives us any color one way or the other. Because, we do have so much inflationary pressure in terms of wages, in terms of what we're seeing, some of the commodities coming back right now. So it's just this one day everybody kind of loves value stocks and loves them for a couple of days. Then, oh my God, rates are going higher. Everybody hates value stocks. We all have to be in growth. And I think you're seeing that.